I don't think.
One
What?
thread I'm going to pull a Balaji here as I'm going to push that conversation on Stack. But one thing I want to make sure I get out there, because it's on the list of things, just we're talking about ideas. It's like, how do you assess ideas? How do you think about ideas? I know, Sean, you love frameworks, and you do too, Sam. Um, here's a simple one in terms of like assessing whether you're doing it for yourself or you're investing, whatever it is. And I'll tell you the common mistake. So the three things I look at are like profit potential. Like if this thing went exactly as planned, as the founders envisioned, what could it be? Like, let's just assume all things, like all the stars align, everything works the way you expect it to, and it goes, what could it be? What's the overall potential for the project? What kind of like passion do you have around it? It's like, okay, are you excited about it or not excited about it? And the third one is around probability of that success that you want, right? And I'm a quant-based guy, so I'll take each of those factors, do a 0 to 10 square, and multiply them together, and I'll get a score out of 1,000, right? And you can put the weighting differently. It's like, oh, I care more about passion than the profit potential or something else. But the common mistake people make is that they will look at the probability of success first, and almost exclusively as the high-order bit filter. It's like, oh, I had this idea, but the likelihood is like 0.01% that that's actually going to work. And so I'm not even going to think about what the potential could have been or how passionate I may or may not be about it. And then they just kind of discard the idea. I think that is statistically unwise and an impractical move. And here's why, is that the way you should be looking at ideas is you kind of take the profit potential, like here's the possible outcome, multiply this, it's the EV, the expected value statistically of this thing. It's like, oh, I have a 1% chance at $1 billion. The expected value is 1% of $1 billion. That's the value of that particular thing. And so you shouldn't discard something just because the probability is low, because it may have a disproportionately high potential that makes it more interesting than it would otherwise. So that's be a little bit more structured about how you assess things. People throw things away too easily because, and the second note I'll put in a hard one, lessons, good ideas are dangerous. And they're dangerous because what you want to find are the great ideas. That's the thing you can kind of get behind. You don't have to find them before you start the company. We can talk about that. So bad ideas are easy to spot. Like, that's just a bad idea. Good ideas masquerade as great ideas, and it's hard to tell them apart. And they're the ones that end up kind of spinning a bunch of cycles for you. And it's like, okay, well, it ended up being good, but just failure is not a problem. Like mediocrity is the thing everybody should be fearful of. It's like, just get it out there, try it, see what happens. But anyway.
And mediocrity is the big problem because it wastes the most valuable resource. It wastes time, right? Because it's not going to die quickly, nor is it going to take off. So it is a slow, long burn at a mediocre level. And so you're sort of locking in over a period of time a mediocre outcome. And that's why mediocrity is the biggest risk.
That I think is hardest about bootstrap companies, especially tech companies that have a low kind of capital need, is they can actually live forever and not go anywhere, right? Because it doesn't take that much to, it's like, okay, you've got an AWS instance somewhere that's costing you, it doesn't really cost that much. And you don't have investors pushing on you to say, oh, we need some sort of outcome. And so you can run that company indefinitely and waste a bunch of your time when the next idea that you could have done was sitting right behind it, right? Like I've talked to hundreds of entrepreneurs by this point. I have never, ever in my entire life met an entrepreneur that had just one idea. It's like, oh, you will have more, dude. It's like, okay, right. And try the thing. If you can sell the thing, sell the thing. If you're not that excited about it, or you just want to cash out, take some chips off the table, there's no harm and no shame. But yeah.
Did you? But you guys didn't raise a significant amount at HubSpot, did you?
105 million in private money before it went public. Yeah, HubSpot's a classic venture-backed playbook company. It's like there's and intentionally so.
But that seems interesting to me because you seem like a guy who likes freedom and knows that knows what he is and knows that he's a little
bootstrapper is what he's trying to say. Why didn't you bootstrap?
Well, I'll tell you the exact conversation we had. So when Brian and I started this, one of the things we were firmly agreed on is that we didn't want, I'm not a baseball or a sports person, but like we didn't want a single or a double hit, right? Like we wanted to like swing for the fences, and either we do this and we're going to, at every point that we have a decision to make, a fork in the road, we are going to take the one that gives us a higher chance of being the spectacular outcome, even if that means we're possibly going to go down in crashing burning flames, right? And so,
but was Brian? Was he successful like you were, or was he early?
Like he didn't like need. He hadn't had like an exit because he hadn't done a startup before. This was his first one. But he also was like, okay, this is my last swing at bat, right? This is it. This is the one that's either going to do it or not going to do it. And so that was the reason. It's like we weren't worried about diluting. We negotiate the fairest value we could. We made sure the terms were meaningful, had good investors, but we were not worried about what our percentage stake in the company was and how that moved over time. We're like, okay, if this thing does what it needs to do, the valuation and all that and the equity dilution will not matter. Like on the margin, we want it to be a binary outcome. Either it's going to be this huge, massive thing, which will change our lives and have a massive impact, or it goes down and crashes in burning flames, which is highly likely. But we weren't looking to hold on to control. We weren't looking at this, like we didn't want to be king. We want to be rich, I guess.
But when you're doing like ideation and stuff, though, you either, I think you wrote it here. You're down with starting a project with a bad idea because you're quite confident that you can figure out, you can make it great as you get into it, right?
Yes. And my general advice is, and this is not just my personal kind of lived experience, as new folks would say, having talked to entrepreneurs and kind of looking at the history of them, so many of them, the thing that we know them for now is not the idea they originally started with. Like there are a handful of cases where, yeah, it went exactly to plan. This is what it was, and often the case is that you will not find the great idea until after you start your company. Until after you start having contact with customers and actually try to do the thing. If you sit on the sidelines trying to assess ideas and look at market metrics and things like that, and it's like you're just never going to get started. That's the kind of wannabe entrepreneurs that will kind of analyze it to death. It's like you wouldn't even know what a good idea was. It's hard to tell these things until you actually try something. It's yeah. So my advice is just do it and try it.
Where do we go from here, Sean? We got.
I think we got to wrap. But here, there's this. I think we have to have you on again if you're down, because here's 5 topics I want to hear about. Why I don't play golf and what I do instead. I want that one. Why I hate inefficiency in markets. Why I don't believe in karma, but I believe in extended feedback loops. Sometimes faking it is making it. Introverted engineer's guide for public speaking. Like I need all of these. So we may have to do another one